where we're just going to talk about an important topic, but an unfortunate topic, but something that I've been getting a lot of requests to do. We're going to talk about Ponzi schemes or fraud schemes that are very prevalent. How can we spot them? How can we avoid them? How can we invest um, and be safe out there? What can we do really? So that's what this space is all about. Give or take about an hour. We can take questions. Like I said, if you have questions, just throw it up on the Twitter handle. And if I see it, I will try to respond. So let's just go right ahead and just try to talk about what is a Ponzi scheme. I like to use very simple definitions. A Ponzi scheme is an offer made to you where the actual returns are not based on the investment generating any returns per se, but on new investments being used to pay off old investments. That's really what a Ponzi scheme is, right? So if you have a scheme and they're offering you an interest rate of, say, 10%, but the scheme itself is not investing in anything, it's not generating any 10%, but it's simply using the new deposits of new contributors to pay you off. That's basically a Ponzi scheme. And the name is from a guy called Charles Ponzi, right? And he was an Italian American that he had a legit business. It was all about he found out that if you buy stamps, you had this international stamp that you could use and to post letters across the world, right? And he figured out, which was true, that if you bought the stamp, say in Italy, for instance, the same stamp could be used in America, for instance. But because the Italian stamp was cheaper, then it's basically you have an advantage. You could use the Italian stamp in the US and then you have a discount, right? So his plan was to just go around the world and buy up all these stamps because they have the same value, bring it back to America and then sell it and then make a return. So that was a quote unquote, it was a real investment or a real arbitrage. But what then happened was that after a while, a lot of people invested in that scheme, and the scheme itself cannot pay or guarantee the returns that Charles Ponzi was promising. So what did he do? Like every other Ponzi scheme, he just created something that was named after him. He simply used new money to pay off old money. And it just kept on snowballing. It became so big and so well known. People were going to take out money from the banks to give to him and to invest. And there was a point he was trying to literally become legit. He bought a bank. He bought lots of other legit businesses, trying to convert all that money to legit business. But literally, the snowball effect, it just grew too big. Questions started to be asked and all that, and eventually it collapsed under its own weight. But the thing that is very, very dangerous about a Ponzi scheme is this. A Ponzi scheme is based on a real idea. It's based on a real idea. So Charles Ponzi had a real idea, and the idea was actually profitable. You could get, as it were, a stamp, sell that stamp, and make a profit. That was a real event. Just like how Bernie Madoff, the other guy that we know, Bernie Madoff ran probably the biggest Ponzi scheme in modern times. His scheme was also quote unquote legit, right? So he was an investment manager. He was a guy that was known in Wall Street for a long time. He was, I think, the chairman of the Nasdaq or something like that. And he ran an investment, right? And he would take money and invest and all that. So maybe in early years it was legit, but he was promising a fixed return. And after time, over time, there was simply no way to guarantee those returns for that long period of time, right? And it turned into a Ponzi scheme where what then happens, he takes new money and he pays off old investors. It's always like that. And that's why it's so dangerous and so difficult to spot a Ponzi scheme because it's based on reality. You are always, you look at the investment, it looks too real. If you research the early beginnings of every Ponzi scheme, it's always real. But then as it goes along and starts to grow bigger, it then tries to go and become something illegal because you're not generating any investments per se, but you are simply using old money on to pay it's old new money to pay off old money, right? That's why it's very dangerous. So, but what's the difference between a Ponzi scheme and a pyramid scheme? Almost the same thing. I mean, both of them are using new stuff to pay off old stuff. But the Ponzi scheme is requesting for an investment. So with the Ponzi scheme, you're requesting for an investment, right? You want a dollar or naira or cities or whatever. But with the pyramid scheme, it's more or less looking for new members. Yeah. So if you had like a club that was selling, say, a vitamin pill, they would say, hey, bring in two more members, and then you rise up a level, and then you make money per se, and all that. So you're bringing in new members to rise up a level and then to make a higher commission. But with a Ponzi scheme, it's literally bring in new money. So we want new money, and the new money comes in, you're offered this percentage, and then basically that's it. You rise, you get an interest rate, and you are only doing as well if new members come into the Ponzi scheme. I mean, the famous ones you have back in Nigeria. I mean, a long time ago, you had Umana. That was like a bank that was promising uh, mind-blowing returns. Then you had the MMM. So I mean, the maths of MMM just didn't make sense to anybody. They were offering, I mean, was it 30% a month or something like that? The maths does not make any sense. Yeah, but as long as people are investing, as long as people are investing in the schemes tend to make money. That's the whole idea. Because the bigger it gets, then the more they can pay out. Then they're always trying to run ahead of redemptions. And everyone just says, hey, I got paid, so it must be real. And think about it this way: you give them 100% of your deposit upfront, but they only give you, say, about 10%, 15% of the interest. So they always keep a part of your principal with them. So they are always in the money. They are always in the money, right? And then you are always the one chasing to catch up with your interest before it goes bust. So that's the thing about the Ponzi scheme. It's using new money to pay off old money. It's always based on a truth, always based on something that is real. And that's why it's dangerous, because you look at it like this is real. That bank is doing the same scheme, or that company is doing the same scheme, but you never really investigate and find out. And that's basically how they get you, because it's a pass off. They pass off something that is fake, like something that was real, and then before you know it, you're stuck, and then you're waiting for your principals to come back and all that. All right. So this is basically the whole idea of the Ponzi scheme and why it's basically dangerous, right? Let's now talk about, if I may, how you can approach investing. Because remember, when humans invest, we invest emotionally, right? We invest emotionally. We don't really take a lot of time and look at the numbers and say, is this going to make sense to anybody? If my friend tells me, hey, I'm investing in this place, and I guarantee it, by that word of mouth coming from someone that I like or someone that I trust, I'm more appealing, or I am more, should we say, reasonable to go invest in that scheme. I might not look at the figures. If he got paid and he's making a profit, and I don't want to miss out, so this fear of missing out, FOMO, then starts to occur in my mind, and I want to get into that scheme so that I can also make that profit. That's what leads many people in. So you are drawn in, you don't want to lose out. So you look at the clear red signs, red lights are in front of you, but you really don't pay a lot of attention to it. And it could, Ponzi schemes are not just by fly by night people. We might not call this a Ponzi scheme, but keep in mind that Enron, keep in mind that Thanos, these were all, corporations. Enron was a Fortune 500 corporation. We might not call what they were doing a Ponzi scheme per se, but they were running funds, they were running deals that were like really clearly outside SEC or accounting guidelines. And they got away with it because people they had the aura of, listen, we're a big firm and all that, so you can trust us. It's the same thing with Bernie Madoff. Bernie Madoff was a well-known name on Wall Street. He pretended that he was legit. People knew him. He had a lot of good paying clients, and that's what deceives people, because this guy cannot be fake if he's been in the market for so long. So we suspend analysis, we suspend rationality, and then try to put money in and be like, well, if everyone is doing it, it must be real. And that's real. Like I said, the dangerous thing about the Ponzi scheme is that it's always based initially on a truth, and then marketing takes over, and then greed takes over, and before you know it, you're then locked in. All right. So, what can we do if we're investors? How can we avoid falling into the trap of a Ponzi scheme? What can we do? The first thing we want to do is that we want to use exception. We want to use exceptions and say we want to eliminate companies or products that do not meet this guideline. So this next stage is not going to be if they are registered, then we can invest. They are not a Ponzi scheme. No, but if they are not registered, then we do not invest, right? So just having a registration does not mean the company is real or the products are real. Remember, Bernie Madoff was legally registered in the United States, legally, and what he was doing, he had all his licenses, like he was the chairman of the NASDAQ and all, but it was all a fake, right? So we want to make sure that we use these next steps as exceptions. So if it's not registered, we do not invest. So the first thing we want to do on our exception list is we want to make sure that that company is registered, i.e., it's just registered with the regulatory bodies. In Nigeria, you want to talk about the Corporate Affairs Commission. Does it have a Corporate Affairs Commission registration number, i.e., the RC number? Is that company registered? Does it have a board of directors? All that kind of stuff. Has it filed memoranda and articles of association? Does it have it? You want to make sure the company has that, right? So that's your first step. Is the company registered with the CAC and all that? Get that done. The next thing you want to do is this. You want to make sure that the company is registered with the Securities and Exchange Commission. Having just a CAC number is not sufficient. If anybody can go to Abuja or to the CAC and register a company, once you pay for your shares, you get a company name, you can register a company. But not everybody can conduct the business of a fund manager or issue securities for public consumption. You cannot do that unless the Securities and Exchange Commission basically gives you approval to do that, right? So the next thing you want to do is to make sure the company has a SEC registration. So number one, it has got to be registered by the Corporate Affairs Commission, right? Number two, it has to have a SEC registration. It has to have a SEC registration, not just a SEC registration, but the registration has got to tie to what they are doing. Because SEC can register you as a lawyer, SEC can register you as an investment advisor, and all that. So if someone is just an investment advisor, but is doing fund management, you want to ask a question and say, hey, are you also registered as a fund advisor? Very, very important that you make sure that you just do not say, oh, I'm registered with SEC and thus I can do any kind of business. You want to make sure that you have the license to do what you're doing, right? So if you go, this is just for Nigerian investors. If you go to the SEC website, that's going to be sec.gov.ng. It's going to put a /CMOS. So that's sec.gov.ng/CMOS. If you just go to the site and you can look for registered market makers and all that, it's right there on the website. You can go in there, you can plug in the name of the company. So if you go to the website, you simply look for under enforcement, you see companies facing enforcement action. That's a very, very good place for you to look at because the company could be registered and has done infringements in the past. You want to go to SEC website and look in that column. You'll see there under enforcement on the SEC website, companies facing enforcement action. You see companies facing litigation. You see companies that have referred cases. You see administrative proceedings. So you can get a sense that if a company's name is in this list, probably people are complaining about them or people have taken them to SEC for litigation, and that could be your first red flag if you see a company here. It doesn't mean they are guilty. It simply gives you an idea of, hey, this is the guys I'm going to deal with. I want to be a bit careful with them more or less. So if you go to the SEC site under enforcement, you will see all those links there that you can basically look at, right? And confirm if that company is basically registered to do what it's doing, right? And SEC also has got a list of registered shareholder association and registered capital market operators. So if you also go to the SEC site, you can confirm if a company is registered to do that business and if the company is registered as a capital market operation. So we've talked about number one, make sure it's CS registered. And then number two, make sure it is SEC registered. Very, very important. It also helps if you can confirm that they're a member of a professional body, like maybe they're a member of the Nigerian Money Market in the Committee or Nigerian Money Market Association, something like that. You want to make sure that people in the industry do know them and can speak well of them. Now, again, remember what I said, because a company is SEC registered or CAS registered does not translate that they are all honest. What it means is that if they do not have them, then you do not invest, right? If they do not have them, then you do not invest. Yeah, right? Very, very important. And this is like, even if you invest in the US, you also have a US SEC. US SEC has a bit more detail on their site. They have what's called the EDGAR, the EDGAR listing, where you can verify the company you're doing business with, who their directors are, what they're all about, how long they've been in business, and all that. So the EDGAR listing is very, very good because you can tell a lot about the company by looking at the EDGAR listing. The US SEC also has what's called the FINRA, the FINRA checklists. So it allows you to ask and check about the background of that company. Listen, are they fiduciaries? How long have they been in business? Things like that. So you want to basically find out about them. They've got phone numbers right there on the SEC website, also on the FINRA website. So you can tell a lot about the company, how they pay themselves, if they're registered in the state, because US does the state registration and also the national registration. So I would say before you do anything, especially with a company in the US, you want to make sure that you go and check out their list. It's like their referral, more or less, how they refer, if they've got any bad referrals and all that kind of stuff. So that is very, very good to know. So number one, you want to see if it's registered, and then number two, you want to basically look at the litigation. Do they have any litigation that is pending on them? And if they have, what is it all about? Is it a red flag for you? So if you want to just summarize what we're saying, you want to ask questions. So ask the person directly and get an answer. Are you registered with CAC? Are you registered with SEC? Ask them and get an answer from them. The law says they have to put the registration certificate in a visible part of the office. So they can't put it in the back office. It has to be right there in the front office. So even if you don't ask, you should be able to see the SEC or the CS registration right there in the front office. So ask and say, hey, can you show me your registration certificate? I want to read it. Make sure it's not expired. You should ask and all that. Then you should go and check. So you can check online, you can check the certificate, you can verify that their licenses are not expired, you can verify that they are not under litigation and all that. Very important. So ask, check, and then you verify. You verify through third parties, you ask the vendor directly, and then you check on your own. So this is what you want to do as a person, right? As an investor, you want to make sure you get these boxes ticked off before you do anything, right? So if you remember what we said, if they are registered, it simply means that okay, you're good to go. If they are not registered, you do not want to invest, no matter what anyone tells you. If it's not a recent registration, if their registration is not up to date, you do not want to invest. What else can you do apart from checking registration and verifying? You want to make sure that how you pay is very, very important. Right now we're in the fintech era and all that. So we pay by, say, electronic transfers and all that. I would advise, if you could, I would advise that you make your payments for financial securities with a check. Check is old school, I get that. But what a check does is a check gives you a paper trail. So if I write a check to you and you take your check and you cash it, I can tell when you cashed it. I can tell what bank you cashed it to. I can check what happened when it got into your account. So it gives you a paper trail. Even if I lose my checkbook, I can go to my bank and say, I want my account statement. My bank can print it out for me and I can take it to the court or to the cops and I can say, listen, I give this guy a check for this transaction and they did not do what they're supposed to do. So I would advise, if you can pay with a check, it's wonderful because then you have that paper trail that you can go back on, right? Then you want to get a receipt. Very important. If you give someone a check, you should get a receipt, and the receipt should state exactly what you were paying for. So don't get a receipt that says payment for investment. No. If you're buying shares of, say, Kalu, you want to get payment for 12 shares of Kalu, right? So you want to get a receipt. Very, very important. Apart from a receipt, you want to get a statement from the company saying exactly what it is that you are paying for. So if you are paying for security that's going to pay you, say, 10% in a quarter, you want to get the receipt, but you also want to get a statement saying this payment is going to be used to buy you this security and you're going to get this return after this social period of time. You want to read that or give it to your lawyer to read, find out what would happen if you don't get paid. Where are you stacked up in the terms of repayment? According to the laws, bondholders have a higher standing when a company is in debt than, say, equity holders. So if you're giving money to the company as a loan, you have a higher stake in the company's assets than if you were giving money to the company to just invest as equity or as a pass-through, just giving them the money to go buy shares for you. So it's always good to just read or get a lawyer to read for you and to advise you. So pay with a check, obtain a receipt, and also get something in writing, like an agreement from the company or exactly what it is that you're paying for. What was the promise made to you, and in return to meet that promise, what was the consideration or the payment that you gave to the company? You want to make sure you get all that in place, right? Of course, you want to make sure you track your investments. You want to attend meetings. You want to read up. You don't want to be a silent person. This is like if you don't know what's going on, right? And someone just told you, "Hey, come and invest." You want to make sure you understand what's going on before you even go on to the company. But after you have made your investments, make sure you keep up, find out what's happening. Hey, are they paying and all that, right? Very important. When you are writing your check, make sure you write the check in the name that is on the registration certificate with SEC, right? Not the name that the company asks you to put on the check. So what I mean is this: when a company is registered with the Securities and Exchange Commission, they're going to have a registered name, right? That is the registered name. They can have a doing business as name, but that name will always be on the certificate. You want to make sure you write your check to match with what is on the registration certificate with the SEC, not CAC, the Securities and Exchange Commission. Because a company could register a firm with the SEC and call it Kalu Investments, right? Then I'll tell you to write me a check in investments of Kalu. Those are two separate companies, and I could take your check to my own personal company and not pay it into the investment that has been approved by SEC. So you want to also protect yourself by ensuring that you write your check in the name that you see on the SEC certificate, not on the name that you see or you are told to write. So let's just do a brief summary on what we've talked about so far. We have identified what Ponzi schemes are, right? We have said, hey, Ponzi schemes are based on using new money to pay off old obligations. That's really what a Ponzi scheme is. And we've said that Ponzi schemes are really dangerous because they are based off a truth, right? So someone says, this person has done it before, I can do it for you. It's always based off something that is true, but they stretch that truth and they inject the fraud in. Charles Ponzi, the original Ponzi, his scheme was actually a profitable scheme when he started, but then it quickly devolved into a fraudulent scheme because there was no way he could pay back all those obligations. He was simply taking new money to basically pay old money. So very, very important that you know that. Then we talked about how we can protect ourselves. We said two things. We want to ensure that the company is registered to actually be a company. Very important. So that's what we call the CAC, or the Corporate Affairs Commission registration. Or like in America, the incorporation. Does it have a UBI? Does it have an EIN? Those numbers are very, very important. You want to make sure the corporation itself is legal and the registration is up to date. Once you cross that, you want to then make sure that that corporation is legally empowered to do what they are asking you to invest in. So it's CAC approved, but it can also take on the business of investing in shares or investing in property. You want to make sure that they can do that. SEC is for tradable securities. So if you want to trade and collect monies from the general public, you want to get a SEC registration. If you have a private club, let's say you have a private club, you guys you support Arsenal, you guys go drink together, then you tell your friends, hey, if you guys give me money, I'm going to invest for you in my farm. That's a private arrangement. But once you start to print paperwork, you start to go out and you start to advertise to third parties to receive money, then you are in the business of transacting and selling securities. Thus, you want to get a SEC registration, right? So CAC and then SEC. And then we said if they have a company registration or they are part of a business grouping, that's also important to know. So you want to know all this, you want to know who the owners are, who is the CEO, who is the MD, who runs the business. You want to also be aware of this. We talked about the US SEC. You can use the EDGAR in the US where they keep good data on who the companies are, what they've done in the past, are they fiduciaries, all that kind of information. And also FINRA, the FINRA rating will tell you, hey, are they licensed to do like CFA, CFPs? Who are they? When did they start from? What are their fees? All that sort of stuff. And we're saying you want to ask and you want to check. You want to ask the guy offering you the investment questions, are you registered? And all that. You want to check and you also want to verify, right? We're saying you want to pay with a check. If you want to make a payment, I advise you pay with a check. You can pay any ways, but I always advise pay with a check. Why? Because you have a paper trail that you can always go and say, hey, I paid with this guy from my bank, and then he promised me this, and he hasn't delivered. Also, you want to get a receipt in paper on email. I like email receipt because it sits in your email. You can never forget it, right? So email receipts are very, very important. Then you also want to get an agreement in writing stating what it is that you are paying for and what the promise was made to you. You want to have this as your starter pack when you do all investments. Very, very important. You always want to write the check in the name that you see on the SEC license, right? So you don't want to write what they tell you to write. You want to write them a check how they are registered. So that way you are matching their registered name with the name that they're allowed to do business with. So this is a good place now for us to then go to the next part of the spaces. Yeah. How can we then protect ourselves if we are already now part of a Ponzi scheme? What should we do? Like we're already unfortunately in it and we think our monies are nearly over. I think the very, very first thing you want to do is not to spend a lot of time talking and appealing and trying to get your money back. You want to immediately get legal representation because you want to put in your notice or your claim very, very early. I mean, if someone tells you, I'm going to pay you on the first, and they don't pay you on the first, that's a red flag. There is no, it's a red flag. Don't say, oh, they were busy. Oh, they said they will pay me next week. Once they do not meet the promise the first time, there is no second chance. You don't wait. You immediately go and you make sure you speak to a lawyer and you immediately take action to take your monies out. Don't leave your money until, roll over your money and we'll give you a higher interest rate. No. Once the company fails to pay you, close your account and take your money out if you can. Don't roll over for a higher rate and all that. It's not going to work. They've already failed now. They're going to fail in the future. So very, very important. Once it happens, do not wait. Number two is you want to make sure that you try to reach out to other people and see, listen, what's going on? Can we have a grouping? Can we form an association? And then can we make some noise about this? Very important to regulator. You are able to go to SEC very, very early and make a complaint very, very, very early to SEC so that they can start the process of maybe freezing the account or stopping that company from taking in new money. So the key thing there is not to wait. Do not wait. Do not take promises and all that. Very important that you move very, very quickly and try to get a resolution and get your money out if it's already happened, right? Okay, let's talk about the NDIC. You know, if you were in, does the NDIC, that's a question I got, does the NDIC help to pay back your money? Okay, number one, the NDIC is a Nigerian Deposit Insurance Corporation. Same in the US, you would have the FDIC, the Federal Deposit Insurance Corporation. Those bodies, right, are set up to protect depositors in banks. So if your money was in a bank, for instance, and then the bank went out of business, then the NDIC or the FDIC, I think the US is up to a $250,000 limit. They can step in and they can cover you for any losses that you make per person. So you can put your money in there and know that, listen, I am covered, but they do not cover, the FDIC and NDIC do not cover securities transactions and investments in mutual funds, investments in stocks and bonds and life insurance annuities. Those are not covered by NDIC, right? So unfortunately, you cannot have any NDIC cover on that. Once your money is in a stockbroking firm or in an investment firm or in a PFA and all that, you are not covered by NDIC, right? So really, that's why you have to be a bit, do a lot more due diligence, more or less, on where you put your money. But there's a company, or so we say a non-profit in America. And America is a bit different. They have what's called the SIPC, the Securities Investor Protection Corporation. They are able to, if your investment firm is registered with them, they are able to actually cover you. So they cover up to a limit of $500,000. That's the Securities Investor Protection Corporation. And the way they work is a bit different. So if I gave money to say Robinhood, so I checked and Robinhood's name was in the SIPC. So Robinhood is covered by SIPC. Let's say I put money in Robinhood to buy shares, right? And my money was in Robinhood and I wanted to buy shares, say next week, and then Robinhood crashed. So SIPC will give me back my money because it was with the broker to buy shares for me. They didn't buy shares, so they'll give it back. They may not cover you if you were simply putting your money in Robinhood just to earn interest, right? Because that would be a deposit transaction. They would cover you if your money was there either as shares or was in transit to be bought as shares for you. Then the company failed or the broker failed, you get a refund on that. So that's the SIPC. That might be a good idea for the Nigerian sector copy to have this sort of protection. So if I have money with a stockbroker and it wasn't there for a deposit, but it was the stockbroker was going to buy me shares say tomorrow or next week, and the stockbroker went belly up, the SEC could maybe give me back my money. So the SIPC does offer that, and I checked. Robinhood was there, and that made me a bit happier. So at least I'm protected a bit if anything happens to me with Robinhood. So really, that is really what it is. I think we've covered a lot on this. Let me see. We've got to do a lot. Let me see. Yeah, we've got a whole lot on Ponzi scheme. Like I said, it's all about you doing your due diligence. You cannot simply say this company has been around for 20 years or for 25 years. You really have to do your due diligence. Every Ponzi scheme starts off as a real scheme. Even the MMM. I'm pretty sure someone had an idea a long time ago and said, hey, you need help, I'm going to give you help. But in return, you have to do this or do that. And then that was maybe a good way for a club or a group of friends to basically get help per se. Then someone took it and has run with it, and it became this huge fraud that basically caught up in everyone. So you got to do your due diligence. You cannot assume that because they are registered, then they are real. You want to ask questions. You want to make sure you are protected, more or less. And if you do that, then that puts you in a better space. Registration alone all that stuff. The only registration that really matters is the Securities and Exchange Corporation registration. The NDIC, the CAC, all that are immaterial. They help you with due diligence, but they are not regulatory bodies that are empowered to oversee securities trading business. Even the NDIC is not going to protect you should you lose your funds trading. So you want to make sure that you are dealing with the right regulator and that you are dealing with the right and registered organization. Guys, I think that's what we have. I'm just going to look at Twitter and get a few questions there so that I can um, answer them. Okay, so I had this guy saying, if what about cryptocurrencies? Are they registered or regulated in Nigeria? No. So SEC, the way I understand what's going on now, SEC was looking at registering or supervising cryptocurrency exchanges and players. They were looking at it, they were nearly there. But the CBN has asked the banks to more or less remove, not to deal with cryptocurrencies in Nigeria. So if you're a cryptocurrency teamed business, you cannot do a transaction or have an account with a Nigerian bank. So based on this, I think SEC sort of stepped down on their, should we say, enforcement or regulatory oversight over the cryptocurrency industry. So that was why, or till now, you cannot, and I would not advise investing in that through what I've just spoken about because it's not regulated in Nigeria. So if you're doing a crypto transaction, you're basically doing your own due diligence. You might not have any protection from regulators because for now it's not under anyone's oversight, right? Okay, great. So I had this other question. What's the difference between a Ponzi scheme and a multi-level scheme? Okay, yeah. So some Ponzi schemes are really, should we say, multi-level schemes, but the difference is this: you can have a legal and very reliable multi-level scheme. You can have a scheme that says if I buy a telephone and I sell and I get to the pool to buy a telephone from me, the company will pay me a fee. That is completely fine, because I'm selling a telephone and I'm making a fee from, say, affiliate marketing or from getting the company more customers. And there are lots of vitamin companies, lots of health companies that basically do this. It's perfectly legal. I think the thing with the Ponzi scheme is this: the returns being promised to you cannot be paid to you. It's impossible. I give you the example. If someone offers you that I'm going to pay you 30% per month every month, he's offering to pay you 360% a year. How do you know if that is high or low? You want to basically ask yourself, okay, what is the risk-free rate in the economy? That's always going to be where you want to start from. You want to start from the risk-free rate in the economy. The risk-free rate in the economy is the rate that you could lend money to the government, right? If you lend money to the government, that's the rate they're going to pay you back. So that's basically what you want to find out. If you're able to find out what the government pays you, then you can establish your risk-free rate. In Nigeria right now, the risk-free rate is anywhere from about 13%, which is what the MPR rate is. So we can say, let's be broad. We can say between 10 to 15% per annum. That's going to be the risk-free rate, 10 to 15% per annum. So if someone is offering you 360% per annum, that's a huge gap. So you want to ask yourself, what are they going to do basically to get 360%? You want to find out, and that should raise flags to you and be like, hey, what are you going to do? Ask the question, how are you going to make 30% a month? If they can't tell you that, then I don't think you should invest in that because it's nearly impossible. Not just is it nearly impossible, it is nearly impossible to make that return over time, over and over and over. So even if you make 30% for the first year, okay, what about the next year? This is the problem. So if you make 30% the first year, you might not make it the next year. If you look at most issues or offers that are given to you from banks, they will always tell you past performance is not a guarantee of future performance. So remember, because a company made 10%, they does not translate that they can make 20% next year or even the same 10% this year, right? So I have a guy who wants to talk. Kingsley, I can hear you. Go ahead and speak. Otherwise, I'll just move on.
All right, thank you, Mr. Carlo. It's nice hearing from you after our engagement at the SCPG. My question would be on startups, investments in startups. What are the indicators you look out for when you want to invest with startups that don't have any prior record or business record and just ideas that are put together? So, what are the indicators you want to see for you to, put your money with startups?
I think that's a wonderful question, Kingsley. A very wonderful question. Now, the question it's let me try to walk back just to see if I can explain this to you. Any company you see, if you see let's pick say Nestle. Let's assume that the price of Nestle is 1,000 naira. Nestle has been around for millions of years, for a long time. Just a long time. That price of 1,000 naira means that if you bought one share of Nestle at 1,000 naira, the dividends that Nestle will pay you in future, if you discounted all those dividends back to today, you'll get 1,000 naira. So the present value of the future earnings it all should equate back to the price that you are paying. In other words, a company is based or is valued based on its earnings. If the company earns money, that's how we can calculate what the company is worth. Just like a tree, a mango tree. What's the mango tree worth? Is it if you cut down the tree and you make firewood, is that the worth of the mango tree? No. You want to say the mango tree is going to produce mango fruits. So you want to ask yourself, how many mango fruits can this mango tree produce in its lifetime? If that mango tree is going to produce fruits worth 1,000 naira in its lifetime, then you can then say, I want to buy this mango tree for 900 naira because if I buy that 900 naira, I can make 1,000 from the fruits over the years. That's the way it is done traditionally. But the question you are asking, Kingsley, is how do we do this with startups, especially these new startups, maybe in the tech space that have no profitability, have no sales? That's the big question the world has now because when Google, when Facebook, when Snapchat, when all these companies start off, they don't have any profits. They don't make any sales. But what they do is that they tend to have a lot of followerships, eyeballs. People click them. And what companies are saying is that if the company has a lot of following, we will value that following like future earnings, which means that the company has future earnings today. If it has followership today, we will try to value those followerships as future earnings and then say they can translate or convert those followers to business in the future and then get earnings. So it's a calculation that you do based off lots of assumptions. It may work, it may not work. Facebook to work, Google to work, many have not worked. So there is no formula, it's a permutation. You're going to ask yourself, will this company make a profit from today? And how do you know? You want to ask yourself, who are the users? That's why you see companies saying we have so and so users, we have so and so market share, because the whole idea is that if I can get market share today, I can get market share tomorrow. That's really how they try to value these companies, but it's all based off an assumption, right? So that's what I would say. It's companies are valued based on earnings, but when the company has no earnings, then it's going to be a problem. Look at a good example for you. I know of a company called WeWork and SoftBank. So SoftBank invested in WeWork, and WeWork says we have this branches, we have this business model, and it was valued at about maybe 10, let's just say 10 billion. But when investors looked at the numbers, they didn't like the numbers they saw, and they pulled out, and the company's valuation fell from 10 to say maybe half of that. I don't know the exact figures, but the point I'm making is that the valuation just went into 10 year, boom, 10 to 5 to half. So what was the company really worth 10 billion? Who knows? But it's come down now because investors says we do not think the earnings they're going to generate in the future are going to be enough. Or other words, we don't think they're going to sell this many mango seeds in the future to for me to pay you 900 naira. So in case they do some a bit more reading, but I just hope I was able to give you a bit of clearance in that, right? So I got a question from.
Yes, 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 indeed. Thank
Thanks,
you so
yeah.
much.
So Beware, I'm going to come to you later on. So let me just answer a question from Yem. Yem is asking, how can you get a refund from a Ponzi scheme? And he says he's a victim of, I'm not going to call the company's name, he's a victim of the dash 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 through a family friend. I will say, first of all, Yem, get legal representation. Make sure you write legally and officially to the company, copy SEC, get your documentation in order, and then do not waste time, go to court. Don't beg for your money. You write the first time, write the second time, get it recorded, write to SEC, go to court. Court takes a long time. See if you can go on Twitter and ask people, listen, have you been duped by this company? If they've been duped, you guys come together, hire a lawyer, go to court. Why are you going to court? Because the company could still have assets. The company could have bought a house somewhere. So you want to make sure you can grab that house, sell that house, and get the proceeds, right? So that's why you want to go to court to get a legal paperwork from a judge saying, yes, you can grab the assets of that company. So don't waste time. Don't beg. Don't go on social media. Go on social media, get people together, form an association, hire a lawyer, go to court. That's what I advise you to do, Yemi. Write your letters, go to court, right? Okay. Be wait, you can talk. I can hear you. Go for it, sir.
Yeah, good morning, Mr. Kalu and all listeners. Thank you for this wonderful session. My question is basically on the agri-tech space now. How do you see the new business, the promise return that, somehow a little bit above the NPR, say 25 to 35% in 9 months. And they were saying that we should limit it to the NPR rate or slightly within 10 to 15% for investments.
Yeah.
How do you see that? And also considering the current government regulatory framework in handling some of these businesses, you see some of them coming out with a private placement and all that. How do you advise an investor to invest in these businesses? Thank you.
Yeah, great question. Great question. So the whole thing with the that collective scheme was that SEC didn't really have a direct oversight over them, right? That was the first thing. SEC didn't really have a direct oversight over them. So in my view, if you are selling agricultural products, if you are going to plant pepper and it's going to harvest, they're going to package, they're going to sell, I do not think you should offer a fixed return because your product is a variable product. The crops could go bad. The crops could be bountiful, like you make a lot of money. I think it should be more of a profit and loss sharing. When you say, listen, this is what we envisage we're going to make. But when we harvest, the total profit I'm going to share with you guys 30% or 40%, not the return, your share. You should sell a profit and loss share, not a fixed return. That is my personal view. When you sell a fixed return on a variable outcome product, you are setting yourself up for trouble. But I think that lots of them have failed, and I think SEC has now said that they have to have a custody agreement, which means that if you sell those investments, you have to have a third party that's going to hold the funds. So it means if I want to invest in an agri company, I don't give the agri company money directly, I give it to their trustee. Then their trustee is sort of like going to watch out for me in that company. So the company says we want to plant. They'll go to the trustee company and say, hey, we want to do a planting season, give us money or write us a check to this seed company. That's what SEC is trying to do to introduce that into that space so that we don't have people just bringing out the scheme, collecting money into their personal accounts because they're not regulated by SEC and then doing as they go out. So that's just what I think. I don't think this is advice. I don't think it's wise to offer a fixed return on a variable outcome product. It's a mismatch. I think they should try to look at doing a profit share. That would work. I mean, when you do the harvest, invite all the contributors and say, this is the harvest is 20 tons. We're going to sell it, and as you have invested, you will get, then there'll be no problem. Everyone will be like, hey, excellent. So that's my take, and I think that's what's happening in this space right now. So, be with did I answer your question?
Yes, yeah, thank you.
You're very welcome. Yeah, Dr. Abdul, I got you, sir. You can go ahead. Uh, So, Yemi, on the DM, I think I also answered your question about getting a refund. So don't wait, don't beg, don't wait. That's what I'll say. I think I have Abdul on the line. If he can hear me, he can speak. Or we can go ahead. I want to just cover one. Yeah, Abdul, go ahead. Okay. Okay. Yeah. Okay, I heard the first part when you said what are the investment opportunities from e-naira. I heard that part, and I think I heard you say how can we protect ourselves from Ponzi scheme. I'm just reading the release now about the e-naira, and I'm just heartbroken. This is bad. This is very bad because they built all this e-naira. I've written about it, and I think it's a very very good idea. This e-naira was going to it's going to really revolutionize and make things a lot better in Nigeria. It's a good idea because what it is just your naira but in digital form. So it means that you can transfer without paying any cost. You can send money from London to Nigeria, from Nigeria, from Lagos to Aba at no cost. So there's no transaction cost, so it reduces transaction fees. It makes your businesses more profitable. You don't have to store cash and all that. And it also brings in safety, and all that. So it was a good idea. I'm shocked that they would do this and say we're not launching today because of Oktoberfest celebration, but they don't give any date for launch. This is a bad one. Many people are going to step back away from this because of this. It's very, very bad. That said, what are the opportunities? I think the first stage was supposed to be was to launch. Then the banks would then take it, and if you want to buy e-naira, you would then go to your bank and buy e-naira according to how much you want. I think if you wanted 50,000 naira, you don't need a bank account. But if you want up to 1 million, you need a bank account with a phone, right? So that was the first step. I think the next step, when you start to see investments, is when the fintech boys grab a hold of this e-naira. Then they will start to do lots of apps. You can use your e-naira and pay your rent, use your e-naira and pay for this or to receive that. That's when you see the real innovation and the real investment opportunities. So I think the investment is going to be in the service providers that are going to use e-naira to do a business. That's where I would watch out for. So if you see a bank or you see a startup saying they're going to use e-naira to do e-naira POS or e-naira ATM, that's where I would like to go to. Or if you see a company that was struggling with cash collections and is now going to use e-naira, which means that profit is going to go up, I'll also like to go towards that company. So I really, really think you should just pay attention. But for now, we just have to watch and see if we get it right. We're supposed to be the first in Africa to launch the e-currency. Maybe we rushed it, but disappointing. So, Doctor, I appreciate you calling in. Yeah, Osaz, I got you, sir. You can go ahead, Osaz. Hey, how you doing? Osaz, you just speak. We can hear you. And I got on. Let me see. I have a. I can read the message on Twitter. So someone is asking me, "Do you think that I think I'm giving the CBN a lot of you can okay, we're gonna move on to so looking. Can you hear me? Go for it.
Okay, thank you. Good morning, Mr. Kalu, and thank you for this session. There is something I came across on Twitter recently about affiliate marketing.
Yeah. Yeah. Well, look at look at it this way. Anytime you see an investment that you cannot really tell what the product is, you are the product. I think there's something called affiliate marketing, and I think it is real, and I think lots of people use it and make money from it. But what I see, to be honest with you, in Nigeria is lots of clickbait, where people promise you if you click here and you buy this video, then you can make money. So you buy that video for about 50 grand and then you pay them. Then you also have to go sell that video to make your money back. So there's a lot of click here, click here. What's the actual product? What are you selling? I asked on Twitter the other day, what are you guys actually selling? And no one could really tell me what they were selling. So I wouldn't buy what I don't know what it is. If you're buying something, you should be able to sell it. That's how you make a profit. So if you're buying a car, you can sell your car. If you're buying a stock, you can sell your stock. But if you're going to buy some training video and you can only have to sell that training video back to somebody else, that sounds or smells like a Ponzi. I'm not saying it's a Ponzi, but it does smell like a Ponzi scheme. So I don't know, but I wouldn't do it. Me personally, I wouldn't do it. So looking, are you still there?
Yes, I am good morning, sir.
Hey, go
My
ahead.
question is, is as regards this e-naira. We are all aware of what happened during the NSAS where CBN clamped down on people that clamped down on the people that sort of organize people and call people to do the NSAS movement. So now I'm asking that if you guys to save have money in e-naira when have been in Nigeria, there's a particular kind of use the opportunity and clamp down and freeze people's accounts. Is there any sense in the e-naira, especially considering the kind of governments we have in Nigeria?
Good question. I hear what you're saying. I understand what you're saying. So first things first, yeah. Irrespective of the government we have, don't save money in e-naira. Why? Because they're not going to pay you interest. So e-naira is the same as naira, but with the e-naira, there is no interest paid to you. What e-naira is set to do is, if you want to transfer money, then you can move your money from the paper naira in your bank to e-naira, then do your transaction, then take it back to paper naira. So if you're not going to move money or do a transaction, leave it in the bank. Don't leave it as e-naira. That's the first thing. So irrespective of the government, I wouldn't want you to put money in naira because there's no interest paid. As to if the government will seize it, that's out of our pay grade, bro. I think we just have to, have to trust and see what happens. I mean, the positive, like I said, is that it's going to reduce your cost. Imagine if you are paying someone through POS, you pay, ATM, you pay, but with the in-air, you don't pay. So that was going to be the advantage of this. So that's really what I will say to Lucky. So let's just pray together and see it comes out right. Okay, I got Hamzat. Hamzat, you can go ahead and speak, sir, if you don't mind. Okay, or I can look at the questions on Twitter again. So this guy is asking, wow, you guys asking about e-naira today. Okay, someone says, Kalu, I saw this coming about the e-naira. If they bring the e-naira back, do you think it's a good investment? Yeah, like I said, if it comes back, um, you guys are funny. Go ahead, I can hear. Morning, sir. Yeah. Yeah. Yeah, I think the loop. The good question. Good question. The loophole is that I don't think those guys are really regulated by SEC. I don't think so. But if they are offering securities to the public, then they should be because they are offering public securities, so they should be regulated. I think by SEC. But the same advice I'll give is the same advice we're giving from the beginning. Number one, are they CAC registered? Number two, do they have any professional? Number three, what is their answer? Have they done this before? Have they paid for before? And what is the referral that they have given? You know. Number four, this 30%, what is it? Is it you give them money and irrespective of the buildings being built, they give you 30%, or when they build the building and the buildings are sold, you get 30% irrespective. If they are up promising you 30%, then it doesn't matter what they are doing with the money. They are offering you a bond. Once somebody gives you a promise and says, if you give me money, I will give you this return after 2 years or 1 year, that's a promissory note. Doesn't matter if they're going to go to the moon or they're going to build a house, that's a promissory note. And with a promissory note, the most important characteristic that you want to judge is the issuer. Who is the issuer? So if Dangote offers you a promissory note, it has more backing than if I offer you a promissory note because Dangote has got more resources to pay. Same thing with real estate firm. If real estate firm offers you a promissory note, you want to ask yourself, how are they going to pay back? So can they give you a polluted check? Because if they give you a polluted check and you cash it and the thing bounces, that's an offense. So can they, if they are so sure that it's going to pay off, maybe they should give you a polluted check. What are they writing to you? The promise to pay back by pay you is just a debenture, that they're giving. You want to find that out, yeah. So you want to basically find out if that you have a debenture or so arrangement. That's what I'll say. So you want to basically screen the issuer, number one, and number two, you want to basically get your exit. So you want to say, even if I trust the issuer, what did the issuer does not pay me? What can I do? And how do you know it's okay? Is there a debenture? Okay, are they giving me a positive check? That's what I would try to do because you want to just be careful. They're not in the financial space and all that. And they might tell you, oh, no one has bought the houses. If they buy the house, I will pay. But that's really not your business. So that's what I would say in that regard. You want to make sure that you're able to confirm and verify. And if I've answered your question, sir.
Yes, thank you.
Okay. So I got a note from my good friend Osman on he's saying that in Nigeria also has a similar arrangement, just like I was talking about the US SIPC, which is the securities what's called the Securities Investor Protection Corporation, where if you give money to a stockbroking firm or to an investment firm to buy shares for you, and that investment firm collapses, the SIPC in the US can pay you back the cash that you have with them. And I said, like Robin Hood, I saw their name under the SIPC, so I was very happy that our cash is protected. So when he said that Nigeria also has an investor protection fund that also operates as the SIPC as well, which means that if you have funds in a stockbroking firm and then you try to invest and then that stockbroking firm fails, you can also get your money back. So thank you, Osman. I do appreciate you for doing that, for letting us know. Right. Yeah, sure. So, guys, we spent an hour. It's been an hour already. We've got calls and all that. So, I think we're going to be winding down. I'm just going to quickly check the Twitter handle if anyone here has left a message for us. Otherwise, we're going to be done, guys. And if you do have other questions, send me a DM or just ask me on the chat. I always respond to my Twitter questions, right? So we can do that for you. So we'll spend an hour, I promised an hour to celebrate Nigeria. I actually did this because I was thinking we were going to talk about E-Naira and all that. What a shame. All right, guys. So I see no other question. Send me if you have. I think we're going to have to wind this down. Tomorrow, which is on Saturday morning, we will have another Twitter Spaces. That is a different topic entirely. We do that. We have the cowrie-wise savings scheme where we're trying to use football as a means to get people to save. So the way it works, you open an account with cowrie-wise and you pick a club. You can pick, say, Chelsea. And if Chelsea scores, you have to go save money. So it's a way to make you save as a habit, right? So tomorrow also by 9, we're also going to be here also talking investment. We'll talk about our savings scheme and also talk about investment. So I hope I'll see you guys all there. So guys, we're going to take our leave. Thank you so much for being here. Do follow on Twitter. My handle is Plan Carlo one. Love you guys. All stay safe. We also have a podcast. The way I see it is all on Twitter handle as well. All right, guys, take good care. I appreciate you guys for listening. Take care.